This is Soumya from Finance and Commerce. Welcome to my channel and please subscribe.
Hi all, welcome you all to the Financial Management lecture series. Today we are discussing about capital budgeting. It is one of the most important portion of financial management. Capital budgeting is nothing but capital asset planning. We know the financial management decisions are of three types. The first one is investment decision, then financing decision and dividend decision. The investment decision is again classified into two, long-term investment decision and short-term investment decision. Long-term investment decision is capital budgeting. So, capital budgeting is a decision-making process to determine whether to invest the capital in a long-term initiative or long-term capital asset. So, there are two important terms. First one is capital and the second one is long-term asset. Suppose you have rupees 15 lakh in your hand. Rupees 15 lakh in your hand. And you decided to buy a new car. Buy a new car. Here rupees 15 lakh is the capital and new car is the long-term asset. These are the two important terms in capital budgeting. First one is capital and second one is long-term asset. In order to buy a car, you may have so many options according to the size of the car, type of the car company and so on. You must select a car which satisfies your needs and the capital. This is what is known as capital budgeting decision. Now, moving to the types of capital budgeting decisions. The capital budgeting decisions are broadly classified into three: cost reduction decisions, revenue expansion decision and other decisions. The first one is cost reduction decisions. The cost reduction decisions are again classified into two: replacement decisions and modernization decision. The first one is replacement decision. When the economic life of an asset expires, that asset must be replaced. That is what is known as replacement decision. If we not replaced it, the maintenance cost will be high. The second one is modernization decision. As the technology changes, the asset must be upgraded according to the technology advancement. That is modernization decision. These are the two cost reduction decisions in capital budgeting. The second classification is revenue expansion. The first revenue expansion decision is known as expansion decision. It is nothing if a business decides to start a new outlet in a foreign company. That is their expansion decision. The company may take expansion decision in order to improve their profitability. That is expansion decision. And the second one is diversification decision. It can be explained by an example. Suppose X Limited is a stabilizer company and they propose to manufacture fridge from the next financial year. Here their product line is diversifiable. That is the diversification decision. These are the two revenue expansion decisions in capital budgeting. The other capital budgeting decisions are mutually exclusive, independent and capital rationing. First one is mutually exclusive. When there are more than one project proposals and we can choose only one from them. Suppose there are three project proposals X, Y and Z. We have to choose one from them and we have chosen X from them. If we select X, automatically Y and Z project proposals are rejected. That is what is mutually exclusive. The acceptance of one proposal precludes the acceptance of other proposals. That is mutually exclusive decisions. The second one is independent decision. It is just opposite of mutually exclusive decisions. The same example, there are three project proposals X, Y and Z. These three project proposals are independent each other. So we can accept these 3 project proposals at a time. This is the independent decision. When we select proposal X, Y and Z proposals can also be accepted. The acceptance of one proposal will not be lead to the rejection of other proposals. That is independent decision. And the third one is capital rationing. When the firm have unlimited funds, all the independent proposals having high profitability can be acceptable. But some of the companies have fixed capital budget. And in the budget, they have fixed a limited fund. In such cases, companies may allocate such limited funds to the projects which maximizes long-run profits. The capital budgeting decisions are replacement decision, modernization decision, expansion decision, diversification decision, and other decisions such as mutually exclusive, independent, and capital rationing. Let us discuss more about capital budgeting in the next video. Thank you.
So, hope you like this video, and if you do, please subscribe and turn on notification by hitting that bell icon. Thanks a lot for watching. See you. Take care.